0.7% in the green for today's session. We gained 0.2% on Friday. We're well above 4,500 points. We're talking about the direction of the market. Some say that we could still see some positivity coming through. What is it going to take for markets to head even stronger from here? Is it about foreign investors coming in even stronger, or is it about the local institutional investors becoming even more bullish about the local market?
Thank you for having me, Eleni. Good evening. I think what had been projected earlier by some analysts has actually come true. We had 4,500 points of the NSE 20 share index as the support level that was predicted about 2-3 weeks ago. We also had the NASI have its support projected at 100 points. It's yet to reach that, but at 97 points, we're really close. And I think people are still bullish. There's a lot of optimism. We will look last week how the market progressed. The indices were down only 2 days out of the 5 market days. Looking this week, Mondays, we know usually the market is a bit depressed. This time round, we see it's the opposite. We see it record a 2-week high again over the 4,500 point mark for the NSE 20. And I think things are positive. And also looking at the foreign direct investment in the country, it's gone up again. Foreigners are doing a lot of trading on the bourse. And also locally, we have institutional and retail investors gaining more confidence in the market.
Also just looking at one of those positive elements, particularly for today, that strike with Kenya Power and Lighting Company, of course, that has been done away with. Is that also adding a little bit of optimism in today's session? Because that was one of the big concerns last week as well.
Yes, it's a good thing to hear the strike has been called off. The management seems to be striking a deal with the unionizable staff. I think it will be sorted out. It was more a worry for KPLC rather than so much for the market as a whole. And I think even if the strike went on, worst case scenario, we would still see a market appreciation in general. But it's a good thing, and I think looking on, the prospects are still good.
Looking at KPLC and KenGen, because we are expecting those full-year results to be released relatively soon, and these companies are on the positive footing at this point. We saw KPLC up over 2% on Friday, so too was KenGen. Give us your views on these companies from an investment perspective.
These companies are in the right sector, I would say. We look at the industrial and utility sector ranked second of the most improved sectors of the economy, only coming second from the financial sector, that is the banks. And I think looking at how much money has been pumped in terms of funding from abroad by bilateral donors and so on and so forth, we see a lot of money being spent on the energy industry, and there's been also a call for clean energy, and KenGen comes to benefit from this. KPLC, on the other hand, the national distributor, is doing very well. This is mirrored by the good performance of the stocks on the bourse, trading over 200 shillings with a rights issue coming up. I think it's in good books. Back to KenGen, earnings per share of 0.94. I think the results should be out anytime, maybe next week or maybe a week after that. We expect good things, and I expect much more.
Standard Chartered Bank and the rights issue that we heard of today, subscription price sitting at 165.45 shillings at a discount of around 34.9%. Looking at the PE of this company, sitting at 15.97 compared with its peers, and KCB sitting at a PE of around 12.47 times and 15.11 for the likes of Barclays. Your view on this rights issue, because we have been seeing a lot of banks coming to the fore and wanting to raise capital.
I think it's well-timed. I would not say, I think the timing is right. The discount is even better, about 80 shilling discount from the share price at 165, quite accessible to many. Some analysts have even said it may be oversubscribed. I'm yet to see. We'll see in the coming weeks. And looking at what they're going to spend the money on, it's a very potent project. They want to take over former Barclays' custody registrar services, and also looking at the capital they want to raise. It's not that much for a bank of Standard Chartered's caliber, so I think it will be a success by all means. And I'm also looking at the stock. We may see it go over the 300 shilling mark soon.
Just touching on KenGen, because it is a company that has come under extensive pressure over the past while, because we're not really sure where it's headed going forward. And of course, we've got licenses that are in dispute at this point in time. We did see it gain slightly on Friday. What are your prospects for this company? And do you think the fact that we have seen the erosion of value for the share price, that perhaps this is a good investment opportunity?
Most analysts have said that it's time to move away from KenGen. They say it's a counter to buy at your own risk, and there are only very risk-loving people who would invest in KenGen right now. But I am not of that school of thought. I believe KenGen is going through a small hiccup in its progress. The company is doing well. The fundamentals are the same. We look at what's ensuing. They had a stay order issued by the High Court 1st September. That was following a threat to have their license revoked. So I would say, if I was to choose sides of the net, I would put my books with KenGen winning this thing. Looking at the share price, 11 as the all-time high for the past 12 months. Looking at it now at 8 shillings and 80 cents, about 11% dip in 3 weeks. I still say KenGen is a good counter for the long term. Maybe for the speculators, it's time to keep away.